Hello, everyone. This is Alexander Horat with the Morgan Millennial Minute Report. The show is brought to you by David Morgan of themorganreport.com. If you could please subscribe to the channel and leave a like on the video, that would be really appreciated. So today we're having Zac Hartley on the show. He is an entrepreneur and also a stock market trader. So we'd like to thank him for being on the show. Hello, Zachary.
Hey, Alex, thanks for having me. I appreciate it.
Oh yeah, thanks for being on the show. So I wanted to see your thoughts on how millennials can build and preserve wealth.
Yeah, for sure. I think the important thing, and especially when you're getting started or you have a little bit of money to get invested in the market, or when you're just a young person trying to get involved in things, I think the best thing you can do is educate yourself first before you invest your money or you put your money into different things. I think the best thing that you can do is try and educate yourself on what are the different options that are available to you. So if you look at first the different things you can invest in, whether it's stocks or bonds or cryptocurrency or precious metals, you should also think about what are the different accounts that you can use to make those investments. At what is the best thing that's going to suit your lifestyle? Do you want to be a day trader? Do you want to be a swing trader? Do you want to be a long-term investor? Or do you want to work on some businesses and have a couple of side hustles? Or do you want to dedicate yourself to one business? I think the best thing you can do is figure out what would work for your lifestyle and then educate yourself as much as possible on whatever topic you decide before you invest your money, because the last thing you want to do is start in a hole. And unfortunately, when you're just getting started and when you're starting to play with your own money, usually you're going to lose money in the beginning. And so if you can educate yourself and try and prevent that, it's going to help yourself out. It's going to help you out a whole lot more in the long run if you can get off on the right foot. So that's where I would say people should start, is try and evaluate what is going to be the best fit for your lifestyle, and then educate yourself as much as possible on the different options with regards to that choice.
Yeah, that sounds like a good idea. Education is really important. So I wanted to ask you, using yourself as an example, how did you become financially independent?
Yeah, so for me, it was a combination of a couple of different things. So when COVID hit in 2020, I had a little bit of money in my pocket, not very much. And so what I started to do was I made a YouTube channel about how I was investing that money and what I was looking at and the companies I was evaluating and the analysis that I was doing. And my goal with that was to try and build out a couple of different revenue streams. And if I could tell this to somebody again, or if I could talk to myself in the past, I would say, Zach, you should have started this much sooner. But what I think worked well for me was trying to build multiple revenue streams that all compounded onto each other. So for instance, the core of my business today is making YouTube videos that talk about stocks, finance, and personal investing. And that's great because YouTube pays me for the views that I bring in. On top of that, I talk about the platforms and the services that I use to make my own investments, such as Questrade is the brokerage that I use to make my investments. And I talk about Questrade in my videos. If somebody likes Questrade or what they've seen in my videos, they can sign up with the link below my videos. And every time somebody signs up, I get paid $70. And so just by making a video talking about how I invest my money, YouTube is paying me and Questrade is paying me. And then hopefully that investment is also paying me. And so just in that one act right there, I have three different revenue streams. And what I've really tried to do in my business is continue to build on that and add more revenue streams that all compound onto each other. So I've got those three revenue streams there. I also run a Discord chat where somebody can sign up for it. It's $5 per month, and they can see all of the trades and investments that I make. They can see my analysis and they can see everything behind the scenes. And so if somebody likes the content that they see on YouTube and they go through the other things, they can then sign up for my Discord chat, and that's another revenue stream. And I have a couple more like that. And so what I would recommend to people is think of yourself as a business and try and develop revenue streams that will compound onto each other. That is the holy grail there, because as you build one up, the rest of them will scale up with it. Whereas if you're just completely segregated with three different side hustles that aren't connected at all, it can be a little bit more difficult as well.
Oh, that seems to make pretty good sense. So I wanted to get your thoughts on the stock market and how you think it's going to be perform now and in the next 6 months. And we also see that there's a container shortage. And I also wanted to see your thoughts on how that would affect the stock market, because it says that it's raising the rates to ship goods by over 300%. So it seems like that's going to raise the products prices here in the United States and other countries. So I just want to get your thoughts on that as well.
Yeah, so looking at the stock market, and especially over the short term, I can tell you right now that nobody has any idea where it's going. Nobody's going to be able to tell you if it opens higher or lower tomorrow. And 6 months from now is usually a little bit easier because over the long term, the stock market goes up, and that's pretty evident. And there's a lot of numbers and math to back that up. But over the short term, nobody really has any idea what's going to happen until there's a major event that causes a crash, like what we saw with COVID. That was an event that caused a major correction in the market, but nobody predicted COVID. Nobody could have said at the beginning of 2020, hey, this is going to be the fallout of 2020. Nobody could have predicted what was going to happen. And so in the long term, nobody's really sure about what's going to go. In the short term, nobody's really sure about what's going to happen with the market. But in the long term, here's what's really key is if you buy great companies, if you buy companies that actually have good business models, that are actually generating profit, and that are going to be here in 5 to 10 years and are going to be bigger and more important in 5 to 10 years, if you invest in those kind of companies over the long run, you're 99% going to do much better than most of the other people out there and the majority of the market. And what I'm talking about when I say great companies, I'm talking about companies like Amazon, like Apple, like Google, like Microsoft, these great companies that we know are going to be here 10 years from now. And we know that they're going to be bigger, better, and more important in our life 10 years from now. And so if you're an investor looking into the market and you have a long-term horizon, I would go through with the Warren Buffett phrase, or the Warren Buffett kind of metaphor that I really like to use is every person gets a punch card, and that punch card has 20 different punches in it. And every time you buy a stock, that counts as one punch. And you only have 20 punches throughout your entire life. And so if that was the case, what companies would you buy and hold for your lifetime? Those would be the great companies. Those would be the best companies. And if you're buying for the long term, those are the companies that you should be investing into. If you're not comfortable enough to pick individual companies like that, then you should be investing into an ETF that's going to give you the same results as the market. An ETF is an exchange traded fund that just represents a pool of companies and a group of companies, usually representative of the broad market and the entire market.
Okay, so do you think this container shortage will affect the stock market and companies such as Amazon, which get a lot of their products from China?
Yeah, it's definitely going to affect certain companies and certain industries. Like there's a lot of industries that just have nothing to do with container shipping, and there's a lot of industries that are completely dependent and reliant on it. So depending on what type of industry and what type of company you're looking at, the impacts are going to be very different. If you're looking at something that completely relies on container shipments coming in from China because they're heavy and bulky, well, you're going to have a tough time with it. You're going to pay higher fees. You're probably going to make less profit on it, and your share price might take a hit. If you are looking at a company like, let's call it Adobe, for instance, that sells a software that is cloud-based, that probably doesn't use any container shipping for almost anything they do, a company like that's not going to be affected by this in any way. And so it really kind of depends on what industry and what company you're looking at.
Yeah, that seems to make really good sense. So do you think a company like Amazon will get hit hard by this?
I think Amazon, as far as I'm aware, they're starting to buy their own ships, and I know that they already have a fleet of planes. So I think Amazon is probably one of the more well-positioned companies to deal with it. The company as a whole, I think some of the people that sell on Amazon, some of the people that are trying to import products from China and sell on Amazon, I think some of those people are going to have a very difficult time with the supply chain. But I think any of the Amazon basic products or any of the Amazon products, I feel like Amazon's at the forefront of the supply chain, and they probably have the budget to buy the containers that they need. Whereas I feel like it's the smaller players that are going to get squeezed on it. So as of right now, I hold Amazon shares. I am bullish on Amazon. I like the company, and I think it's the smaller players that are going to struggle more with the container shortage, personally, or it's going to be the companies that try to sell products that they import from China and sell on Amazon. I feel like it's not going to be Amazon that feels the pain.
Okay, so you said you thought the stock market is going to be going up most likely in the next 6 months. So what are some stocks that you're watching?
Yeah, so a couple of stocks. If you watch any of my videos, I made a video just last week about two stocks that I'm buying right now, and I actually just made the purchase. The first one is called Coursera, Coursera, and they do online learning and education through institutions. So you can get a full-on college degree, you can take a course in computer science, you can learn a variety of different skills and get actually accredited for it through this online learning platform. They have amazing margins, they have amazing growth, and the stock is down about 50% from the highs. So I just bought that up this week. I am long-term bullish on the company. I plan to hold that for a while. And the second company I bought this week is a company called Li-Cycle, Li-Cycle. And what they do is lithium ion battery recycling. They just merged with a SPAC, which is a special purpose acquisition corporation. So they put the two companies together. This company is now publicly traded under the ticker symbol LICY, and they bring in scrap materials and old batteries from battery manufacturers and battery disposal depots. They bring that material in, they recycle it into fresh battery grade ingredients that can then be sent back to battery manufacturers and put back into vehicles. And so what I really like about this company is that the supply of lithium ion batteries that need to get recycled is going to drastically increase in the future. And the demand for those materials and those ingredients that go into the batteries is also going to drastically increase. And so we have this company in the middle where they're going to have more ingredients and a higher demand for those ingredients. And so I think they're excellently or very well positioned in the market. So those are two companies that I just bought this week. I also just interviewed the CEO of Drone Delivery Canada. I'm pretty bullish on that company as well. So yeah, there's three for you.
Okay, is there any metals that you're watching that you think will perform well?
Yeah, I think over the long term, what you really need to look at when you're looking at metals and anything in that industry is you need to have a catalyst and a reason for why the supply or the demand might change. So if the supply goes down, the price is going to go up. If the demand goes up, the price is going to go up. And so you need to understand that supply and demand cross section, and then you need to find a reason for one of those forces to change. And so in my mind, I think that the demand for battery ingredients is going to drastically increase in the future. And as of right now, I don't know if the supply can keep up with it. So I'm very bullish on all of the ingredients and all of the metals that go into lithium ion batteries, particularly lithium as well as graphite. So those are two sort of areas where I think there's a lot of opportunity. Gold prices are also extremely high right now. So I'm invested into a company called Gold Mountain that should be nearing production here in the next few months. So there's a lot of different opportunities out there. What I think you really need to focus on anytime you look at this industry, though, is you need to have a catalyst for why the supply or demand force will change, because that is what will drive the price of the material or the rare earth ore or the gold or the lithium, whatever it is. That is what will drive the price. And if you can kind of understand that, it gives you a little bit of an early mover's advantage for getting in and out of these securities.
So what's your outlook on a metal like platinum? Because we saw historically that platinum has always been worth quite a bit more than gold, but now it's half the price of an ounce of gold. So I just wanted to see your thoughts on platinum and where the price is going on that.
Yeah, I think over the last little while, we've seen some great progress with the price of gold, especially over the last sort of 1 year. And so I think it's about the use case. It's about the demand for that product, the demand for that ore. And with the insecurity that's going on in the United States, the inflation and the money printing that's going on, that has driven up the demand for gold. And I think that's probably the largest factor there. And so that's the catalyst behind the rise in price in gold. And as of right now, I'm not extremely educated on it, but it doesn't sound like there's as strong of a catalyst for the other materials out there. And so I think that's probably the main reason that we've seen gold go up so much, as well as cryptocurrency, for instance, is because people are a little bit more concerned and a little bit more worried about holding dollars because of the inflation and the money printing right now.
Right, yeah. So I just wanted to get your thoughts also. A lot of people like holding their money, storing their wealth in US dollars in a bank account or cryptocurrency, for instance. There's some people, and some people like storing their wealth in gold. So I just want to see what you thought the best of the three was for storing your wealth long term.
Yeah, so it completely depends on the person and what they're looking for in life. So for instance, if you are looking for cash flow and you want to live off the income that your investments are generating, then real estate or dividend companies, or if you have enough money, bonds are probably the best bet for you. But if you already have some cash flow, you already have enough to kind of cover your means, then it really just comes down to your risk tolerance. So you can buy a lot of young up and coming software and tech companies right now that have a lot of potential to change the future, and over the long term you'll probably do really well. But some people just aren't okay with that risk, and so something a little bit safer is better for them. And so a mix of an ETF that matches the broad market and a little bit of bonds might be a better portfolio for them. So where you store your wealth is really dependent on your needs as a person and your cash flow demand, as well as your personal risk tolerance. And it's kind of like a cross section of those two factors. So if you don't need the cash flow and you have a high risk tolerance, well, there's some amazing tech companies out there that could absolutely explode over the next 10 years. But if you can't handle that risk or volatility, then something safer like a dividend ETF or a variety of dividend companies, or maybe a couple of properties or a REIT, for instance, those options probably fit you a little bit better. So it really depends on those two kind of factors of your personal need for cash flow and your risk tolerance will determine that for you. But um, for me personally, I'm a young guy. I have enough cash flow that most of my money's going into investments. So for me, my time horizon is 10, 20, 30 years where that's when I'm going to need the money when I'm kind of retiring. And so as of right now, I'm investing in growth stocks that I think are going to outperform the market and do much, much better than anything else over the long run. So I am investing in a lot of younger companies right now that are a little bit higher risk to reward ratio, but I'm okay with that because I don't need the cash flow right now, and I have a long time horizon, and I have no problem handling that risk right now because I have a long time to recover if it doesn't go my way. So kind of a long answer there, and it kind of depends, but the best place to store your wealth is where you're going to be most comfortable with it as well.
Yeah, that makes sense. So you touched a little bit on real estate. So I was wanting to get your outlook on the real estate markets, where you think it's going, and also what area you think would be the best area for people to get into real estate.
Yeah, so real estate is kind of tricky because there's just such a variety. If you look at residential or commercial, and then all the different types of residential and commercial, it's quite a wide variety. What I would say is you should try and get a mortgage on your home instead of renting. Most cases, that's the right answer. 95% of the time, it's better to be paying a mortgage in the place that you live. And then if you're going to invest your money into property or you're going to invest your money into real estate, the two things you should consider is how much cash flow is it going to provide you, or is it going to at least pay back the mortgage that you probably have on the property, and how safe or secure is it? So if you only have a one house detached that only has one tenant in it, well, there's a little bit more risk to that compared to a duplex that has two different tenants in it. So if one guy moves out, you still have 50% of the money coming in. Whereas if the single house, you have the tenant move out, you could be out of rent for 1 to 2 months if you can't get it rented out. And so the big things that you need to think about is what is the ROI or the cash flow on that property, and then secondly is how secure is that cash flow or that investment. And the larger you go, the more you should be able to kind of plan that out.
Yeah, I think it's really important how you say to get more income streams, because the more income streams you get, as you said, the more wealth you're going to accumulate. So I was wondering if you could tell the viewers a little bit about your YouTube channel and website.
Yeah, so my YouTube channel is the same as my name. So Zac Hartley, ZAC, and then HARTLEY. And it's primarily kind of 99% focused on stocks, investing, personal finance, a little bit of crypto in there. And basically, the goal is for me to share with you what I'm doing with my money. So, what companies I'm investing in, what companies I'm looking at, how I'm spending my money on different types of assets to generate an ROI. And it's kind of a documentary of what I do on a day-to-day basis and how I spend my money. And so if anybody's interested, definitely check it out, like and subscribe to the videos. It's just my name, Zac Hartley. And the goal with that channel is to try and share with you how I look at investments in my money, as well as provide you with some knowledge and some basic education about what the different terminology means, what the different indicators on a stock chart mean, how I read a financial statement, different aspects like that. And then if you're interested, I also have a full step-by-step course on how to basically trade and get started in the stock market. It's hosted on Skillshare and it is completely free when you use the link underneath any of my videos. You get 2 weeks of free access. And if you cancel in under 2 weeks, you get the entire course for free. So I highly recommend checking it out.
Yeah, I would say to all the viewers, please check out Zachary's YouTube channel and website. Please subscribe to his show. And is there anything else you'd like to add in the video, Zach?
No, I think we covered the big things. What I would say is like if you're looking at getting into the market and you're looking at getting started, there's a lot of options out there for you to try things out without actually spending your money. And so what I mean by that is if you want to get into the stock market, go open a paper account or a practice account. And what that means is that you'll get access to the platform, but they'll give you fake money. So $100,000 of fake money, and you can go try out your different trading strategies. You can go buy your favorite stocks and you can see how you will do over time without losing your actual money. Because when you're just getting started, that's when your odds of losing money are the greatest. It's really tough to make money right off the bat. And so if you can lose fake money or if you can mess up in a practice account, it's just going to set you up so much better for the future. So if you're just getting invested, you're figuring out what to do with your money, try to experiment and try to test your strategy out without actually putting your money up first. That's going to be the best way to do it. And if you're interested in learning more about the stock market or investing, check out my channel, check out my course. It's completely free. It won't cost you anything. And I promise it'll get you set up correctly.
Yeah, that sounds like a really good idea to use fake money to see, get started without, losing real money. That's a really good idea, and thank you for sharing that. And I would just like to thank you for being on the channel, Zachary, and I hope we can have you on again soon.
Yeah, I'd love to come back. Thanks so much, Alex. I appreciate it.
Oh yeah, I appreciate you coming on the show, and I'd like to thank all the viewers for watching the show, and thank you everyone, and God bless.